Alright, good afternoon, everybody. Today is Wednesday, the 21st day of May, 2025, and we're going to get started right on time here. Um, yeah, I got some things that I want to show you, and We're going to trade right away too. We're going to get all that going too, but I got some things that I do want to show you. First, if anybody has any questions, type them into the question box. The only people who can see what you type, well, the only person who can see what you type is me. So anything you type in, I'm the only one who can see it. So don't be shy, okay? Um, and let me get my DOMs all back in the right places here. All right, so when you have a red background, you're going to be looking for short trades. When you have a blue background, you're going to be looking for long trades. That's pretty much what we got going on right here. So right now we have a blue background over here. When you have a stripe in the background like that, guys, that just means it hasn't printed right. Just go off and go back, go to a different time frame and come right back to it. That's all you have to do in there, okay? Um, need to lower volume on your computer. Am I really loud? Alright, well, I'm recording it in two different places because the normal thing that I recorded on didn't sound like the audio was coming out right. Alright, so right here, coming out of the oversold right here on the NQ, that's a place where you would wanna trade. Now it's a little choppy in here. I'm gonna throw my stop at break even on this. I'm gonna show it to you right now. I just took that trade right there, okay, from down here. 47.75. I'm just gonna lock in 47. That's 7 points. 28 ticks right there. We'll just go up there. That's 10. That's 40 ticks right there. That's 10 points. 40 ticks. Now, all I was looking for on that was coming out of the oversold with a blue background, right? Now, there are some things that you should really pay attention to that I will show you um, as we get through this. All right, I'd want to go over all these things, but that was just a nice, what was that, 10 points right there, right? 40 ticks on that one right there. That was a sweet trade. So what I would be looking for right now, I'd really want it to get up above this prior swing high. If it doesn't get up above the prior swing high, we're in some chop right here. Okay, and that's kind of what it was in here was chop. But there are two different ways to trade this, right? You can trade it aggressively. You can trade it aggressively, or you can trade it. Hang on, I'm trying to find the question box. Here it is. You can trade it aggressively, or you can trade it conservatively. Um, that was kind of aggressive because we're in chop. When you're in chop, you want to be aggressive. Okay, that means you would trade from the bottom to the top and from the top back down to the bottom, depending on the kind of chop that you're in. Now, I did something about this a while back about the different types of chop, and I'll just go over it really quick with you. You know, there's channel chop like that. That's what we were in right here, channel chop. Okay, it was like that was our channel right there. It was actually a little less than that. It was like that was our channel right there. There's channel chop, and then there's bugle chop, which we don't have right here. This is now actually turning into a trend, all right? But there's bugle chop, which goes like this, and there's triangle chop, which goes like that, okay? Now, the triangle chop, you get diminishing results from the trades because you're getting closer and closer to the top and bottom. The channel chop is really easy to trade because you just buy at the bottom, sell at the top, sell at the top, buy at the bottom, buy at the bottom, sell at the top, that kind of thing. Now for the channel chop, you usually got to have something else going on in there. Um, there's a nuance to it. I'll get into in just a minute. Okay, and for the bugle chop, I don't think I went into this the last time. I might have, I might not have, but that usually occurs when we don't have a situation right now where I can show it to you, but when we do get a situation, I will show it to you. Um, but let me just get rid of these things that I just drew all over the charts here. Okay, let me just get rid of the drawings on that chart. Remove those drawings, and I'll put that one arrow back on from that trade that we did take. Okay, so basically what you're looking for is when this goes into the oversold, you're either going to buy when it goes in or you're going to buy when it comes out, depending on what color the back. Well, if the blue background is there, you're going to buy when it goes in or you're going to buy when it comes out, depending on what type of market you're working with. Okay, so I just picked up 40 ticks on that, 10 points. I picked up 40 ticks on that. Let me write that down. Q 40. In the meantime, the nuance that I was talking about, once you have a move like this where it goes from, let's say, right here to right here, where it comes out of the oversold right here, from there up to the swing high is what you expect is defining your leg length. okay, is defining your leg length. So from there, you should look for a pullback down to like the midpoint of that area. And if it happens to be at the midpoint, when this TV Trades range trigger goes into the oversold down here, then that is the point we would be aggressive. Okay. Now, I said there's different ways. Like right here, right now, if we get a down close on this bar, we're going to be going into the oversold on a down close on that bar. It's going to be a little bit below. It's going to be a little bit below the midpoint, but it'd still be a pretty good place to go aggressive. Okay, so if you get a down close on this bar, I'd sell it. All right, now this is a 47 range, so it's 12 points from the top, so it's going to be 68 down to 56. So I can just go down right now to 56 and put a limit order down there at 56. Oops, hang on. I can go down to 56, and here it is. I just put a limit order down there at 56, okay, and it just filled me right there at 56. Right there at 56, okay. So this is being aggressive right now, okay. When it got down into the oversold, I wanted to buy it when it got down into the oversold right there. Okay, buy it when it got into the oversold. This is aggressive because it's right there at the midpoint. What it should do right now is get back up to the prior swing high. Now, this is probably overly aggressive on this one. I probably shouldn't have done it right there because it's a little bit below the midpoint. But usually I like it to be closer to the midpoint, right at the midpoint. But we should be able to, once this gets up to 50 right here, then we're going to bump our stop to break even, right? So it should get up at least up to like right here, 70, 50, and that should be enough to get this to break even. Every trade that I take when I'm on the NQ, I have a 60 tick stop and a 75 tick target. All right, so we might stop out on this. We may not. I don't know. But I bump the stop to break even after I get 20 ticks in profit. Okay, that's the way I run the NQ. Now, we're not quite there yet. That's the stop right there. And we'll see if we get stopped out or not. My very first trade today, I made a mistake, and I stopped out minus 60 ticks. And it took me 6 ticks to get back from that to get to the goal for the day. But and this is kind of a mistake, too. I shouldn't have done it from right there. I should have waited for the up close and come out of the oversold. But I think we're going to be okay on this. We'll see. Anyway, let's put this right here, and we'll get back to that in a minute. I just got to keep my eye on that. When that gets to 50, I got to bump the stop to break even. In the meantime, the ES has gone into the red, right? And this has gone into red now, too. So the ES has gone into the red, so now on the ES, we're going to be looking for a shorting opportunity. Okay, this looks like it's probably going to get us here. Did it stop us? No, it didn't. On the red, on the ES, we're going to be looking for a shorting opportunity, right? So using the same logic that I just used with that, oops, I didn't mean to do that. Let's go back here. I would be looking for an opportunity to short it from right up here at this midpoint area right here. All right, now we're not going to have, it's not going to work out right now. This needs to go down to get into the oversold, then come all the way back up and get into the overbought. Okay, the way that this worked out, that's how it's going to pan out. Over here on the Russell right now, we got a little bit of a pullback here and a little bit of a chop right here too. Now, I said earlier that there's different kinds of chop, right? There's this kind, and this kind. Now this, when it gets up to 50, I'm going to bump that stop. But I said there's different kinds of chop, right? And there are different kinds of chop. The way you trade, there it is right there. I got to go to break even on that. Okay. Now I'm going to lock in just a point on this, all right? So I'm not going to take nothing away from this. I said it should get up to about right where it's gotten right now, so I'm actually going to lock in more than a point. A minute 56, I'm going to lock in 4 points right there at 16 ticks. Okay, because it's at a point right now where it should turn down right here. All right, this would be actually a place where you could aggressively short it right now. So I took the long for 16 ticks from right in here. That was actually a little bit of a mistake. Okay, so now when it comes out of the, all right, it just went back into the blue background. So I guess we're not going to do anything on the short side there. It just went back into the blue background. So if I had kept that trade on, then we'd be up pretty close to the 75 tick profit target. But I got 16 ticks on that one. Right, I know I'm going really fast here. I'm going to slow it down in a minute. I just want to take some trades in here. Sale on the ES now, it hit the 50%. I did hit the 50% here, but the problem with that is it's got to go from here all the way back down into the oversold and then come back up. Okay, because it's showing weakness right here. Wayne, you see it? It's showing weakness right there because it didn't make it down into the oversold from here. So now it's in the oversold, but now we're going in the opposite direction, right? So now you got to draw this way, all right? This way, from here up, like that. Okay, so this is not a good place to enter a trade right here on the ES. Not yet. Okay, you just gotta wait a few minutes. It'll come up with something better here in a few minutes, probably. Okay, over here on gold, see the gold is not the gold. The Russell is a little bit choppy here. The gold is over here. Sorry, I haven't even looked at the gold yet since we started. All right, so let me slow this down. Let me slow this down and talk about things a little bit more. Okay, so the TV trades. The TV trades is the thing that puts the backgrounds on here, right? If you haven't taken a free trial with us, go here to tvtrades.com, right? Click on any one of these orange things. Where are they here? And with these orange things, click on that. It's going to bring you down to here at the bottom. It's 25 bucks a week, or 90 bucks a month, or $9.97 a year. There's, the $9.97 a year is obviously the cheapest one, but there's also something good about being in that group. Because if I roll stuff out and I want to roll it out to a select group, it's going to be that group, because I can roll things out individually in that group. Well, not individually, but it's a smaller group, so I can roll things out to people in that group pretty easily, and give them a good chance to test it out before I even make it a beta for other things. There is something that I'm working on right now in my quest to get the swing trades done. I've come up with something else that is really pretty awesome, and I'm still working on it. But you can see where you get this. It's the bar after that you would go in that direction. It's the bar after, right? You get that, the bar after you buy. You get that, the bar after you buy, and that's on 100 range. So every one of those bars is 100 ticks. You get that, the bar after you sell. You get that, the bar after you sell. See, you get that, the bar after you buy. You get that, the bar after you sell. You get that, the bar after you sell. You get that, the bar after you sell. You get that, the bar after you buy. The bar after you buy. The bar after you sell. That one would have stopped you out. But you see, it's and these are 100 tick bars. So every one of these things is 100 ticks. And I'm still working on it. It's getting closer and closer to being something that's going to be useful to everybody. There's another thing that I created too, guys. One of you guys, one of the newer fellas that is here. He likes to trade the micros, right? And I hadn't really even thought about it. All the stuff that I have in Telegram, all the Telegram channels. We have this one right here, which is the TV Trades trade signals. This has got stocks and the ETFs in it, right? And so today there are 76 signals that are sent out. This is just got futures signals in it. The YM, the CL, gold, crude, things like that, the ES. This one is a new one, all right? This is a micros channel. It's just got micros, right? Micro futures in it, because I never had one for micros. All right, I just rolled that out like yesterday, the day before yesterday. And we have this one, which is the swing trades, which I'm still working on. And this one, which is public, open to anyone, that you guys can get in there. And if you're not in this one yet and you want to get in this one, I'll give you the link to it right now. Okay, if you want to join this one, I should put more stuff in this, but it seems that I do that last. I put this stuff in today. But let me give you the link to that. Okay, I will hit this. That is the link to join that channel. Okay, if you want to join that channel, that's open to everyone. And I will be putting more information in there. But this is open to people who are on the trial and people who are subscribed. This is open to people who are on the trial and people who are subscribed. This I am going to open up to people who are on the trial and who are subscribed. This is the swing trade one that I'm still working on. And this one is open to everyone. And there's one other one somewhere. This one, I think. Nope, not that one. This one is open to everyone, but that's not the one either. Anyway, there's another one out there that's the NQ one that I still haven't finished yet either. It's just NQ only. But that's all part of what you get when you sign up. Okay. Telegram channels. All right, so it's 12:46. So far, I've taken a couple of NQ trades. The market's just slowed down while I was saying all that. It looks like the market's just slowed right down, and that's good. Go back to the question thread. Okay, so there's a micro one right there. And however you have it set up, like the micros, the alerts on the micros. Oops, hang on. If I do this over here, the actual alerts on the micros, the MYM, MIM, MRTY, MRTY, MES, MES. The way that I have them set up, you can set it up however you want, but I have it set up to send something out to Telegram to notify me in the app on my phone. And well, that one that just popped up a minute ago, I have it showing toast modification. This is what the toast modification is, like that. Right. This is actually on the Telegram channel that's popping up, and this is the one from the toast modification. So you can set it up however you want. If you have it done in your app on your phone, if you do it in your app on your phone, then this one, notifying app, then that will send you a message on your phone whenever a signal happens. Okay, it'll send you a message right in your phone whenever a signal happens. Okay, now let me see. I want to make sure I answer everybody's questions. Does anybody have any questions at this point? Okay. I want to let you all know, once you join and subscribe, I'll give you a number where you can text me if you have questions. You can text me at that number. You can send me screenshots and stuff like that, so I can reply to you fairly quickly on a screenshot. I'm not gonna do it right here because it's gonna end up on the internet. But once you join, then I'll give you that information. Okay, so you'll be able to contact me directly if you need to or if you want to. Am I still using the black-white sign signals on the range trigger? Yes, I am, James, but I just have them shut off right now. Is the 4-day trading days? Sadly, Casey, you mean the trial part of it? It's calendar days. Because it's based on Stripe, and they do it based on calendar days. They can't figure out what trading days are and when there's holidays and all that business. Okay. If you want to, yeah, that's fine. Or if you want to get it over the weekend, then do it now and you'll have it today and tomorrow and Friday. And over the weekend. But it's up to you. Okay. See, all these things just triggered. The MNQ triggered on 100 range, the NQ triggered on 100 range, and this was the NQ exclamation point. I don't know why I got two of those, but anyway, I did. Alright, so basically it was saying you have a short here on the NQ. All those things triggered a short here on the NQ, and it looks like they were alright. Now, what they trigger from is really this. Let me show you what they trigger from. Alright, they're not triggering from the newest things. They were all triggering from this, I believe. There it is. That's what they triggered from, that red arrow right there. Okay. That is what they all triggered from. So they all nailed that short pretty well. Alright. But Casey, aren't you subscribed? Or did you cancel for the summer? And you talking about coming back? I thought you were already subscribed. Anyway, right here we have this big leg down. So what I would anticipate from this big leg down is a deep pullback, right? A pullback somewhere up to here is what I would anticipate, right? And on this one, you have a similar thing. This one's going to be a little less dramatic, but still, it's going to be a deep pullback. I don't think it's going to happen all at once. I think what's probably going to happen is it's going to pull back a little bit, like up to here, and then give a push down, and then not make it all the way down to the oversold, and then come back up again, make it up to the midpoint, and then give a push down, and you won't be able to trade that one. That's what I think is probably going to happen. Okay, because using my rules, once it goes out of the overbought, it has to go all the way into the oversold before you can trade in that direction again. So if it does something like this, like it might actually go all the way up there, which would be good. But if it does something like this, right now it comes out of here, like it moves down to right here right now, like that, and then goes back up into it, and gets back up to here, and then moves all the way down, I wouldn't take that second trade. Right, but that's probably what's going to happen on both of these right here. Now these are both valid trades. Coming out of the overbought right there is a valid trade. Coming out of the overbought right there is a valid trade. It's just not a really high probability trade. Okay, look, this made it all the way into the oversold, so that makes this a little bit better, a little bit more appealing right now. The fact that it made it all the way into the oversold right here, it didn't do just this little leg, so that does make it more appealing here. But now it's going to get back into the overbought to give us what's left. All right. So James, yes. The question was, am I still using the optimized trigger? That one. Yes. That is, you know, that is working really well for a lot of people. But when I'm doing this trading in here right now, I want to include the nuances and stuff like that. That doesn't really give room to talk about the nuances, because you're just taking it when it's white and it goes into the overbought, you're just taking the trade, and when it's white and it's going into the oversold, you're just taking the trade, right? When you have the right background color. But what I wanted to do in here is include a little bit of this stuff where you're able to see the better place to trade based on what price usually does and should do. Okay. Now, sorry, that was a lot to say. This right here, now that both of these have gotten into the oversold and neither one has pulled back into the overbought yet, that shows there's momentum on the downside because it hasn't pulled back into the overbought yet. I want to see a lower swing right here. That would be great if we got a lower swing right there, because now you'd be drawing like this, okay, from here down to here. All right, and over here on this, oops, I mean that. Slide this over a little bit. Over here on this one, oh, I did it again. Over here on this one, you'd be drawing from here down to here, like that. Okay, extend this down a little bit. Extend this down a little bit. And so what I'm waiting for now is an opportunity to enter here or here. All right. Now the way it looks like it'll work out, think a couple bars ahead, okay? The way it looks like it'll work out. If you get an up close on this one, that's going to bring us here, and then the up close on the next one will bring us right about there. It won't be enough to get us, well, it might be enough to get us to the midpoint. It might be enough, just enough to get us to the midpoint. Over here on the S, because it's a 7 range, both of them could work out. An up close on this one would be an aggressive short. If you got an up close on this, it landed up there and brought that into the overbought, I'd aggressively short the ES right here. Now when I say aggressively, I mean you short it when it goes into the overbought instead of when it comes out of the overbought. Right? It doesn't look like it's going to turn out that way, but I would do that if that happened, but it's not going to turn out that way. See, when I'm trading like this, when I get going, I know there's a lot of markets right here, and you don't have to do all the markets at once, but when I'm trading like this and I get going and my mind is just running through all the potential scenarios and all the different markets, I like to go with the ones that are the highest probability, right? And then just move on. These are the only two that are really moving right now. The Russells, we're not going to have a trade here on the S for right now. I keep stretching this out because it keeps putting in lower lows on both of these. And the way it's going to come out, I like to think a couple bars ahead, right? So I know how big every bar is going to be because these are range bars. So I know ahead of time how big every bar is going to be. So I know ahead of time roughly where it's going to end up when it closes. All right. So it's going to take 3 bars to get from here up to here, and 3 bars to get from here up to here. So that's going to put us in a flat spot up here at the top. If that happens, it's going to put us in a flat spot up here at the top, both of these. All right. So then it wouldn't be an aggressive trade anymore at that point. It won't be an aggressive trade. It'll be a conservative trade. You'll be waiting for it to come out of the overbought. Right? There's the flat spot. We still haven't gotten up there. Okay. It'd be a conservative trade instead of an aggressive trade. This is not a good spot to trade from right here. Okay, you're so close to the swing low, it's probably going to bounce off the swing low and pull back up. All right, when it came out of the overbought right there. I mean, you could have taken it. If you did take it, you'd be ready to break even right now. Again, that's one of the nuances, right? So, I mean, you can't just take the signals. If you just take the signals, you got to get in there and take your money and don't keep trading. Once you get where your goal is, stop trading. Otherwise, you're gonna overtrade. And if you end up stopping out a couple times in a row, the worst thing that you can do if you end up stopping out a couple times in a row is change your trading plan. All right, that's the worst thing you can do. If you stop out a couple times in a row, the market just might not be made for the trade setup that you're using at that time frame at that time in the day. So just stop. and let the markets move, let them get out of whatever funk they're in, and let them move, and then get back into it a little later. There's always going to be another trade, and you don't have to do it all at once. In the mornings when I do it, I have 9:30 to 11:30. Like right now, I have 2:30 to 4. So I do have a time window that I have to work in. But so far, we've gotten 2 trades, and they were both profitable trades. So, you know, I was up pretty good on the day today. It wasn't a great day, but it was a pretty good day. If I hadn't messed up that very first trade, then it would have been a much better day. But today, I was up $790 a contract. So with 10 contracts on, I was up $7,900 this morning. In the 2 hours, I took 21 trades. This morning, it took 17 minutes to get my goal for the day. That's like 4 days worth. Because I stopped out on that first trade. I made a mistake on that first trade, and I had to get it back. So this right here on the ES is a pretty good spot to trade right here. This down close, it's off the midpoint, and it came out of the overbought. So this right here is a pretty good spot to trade it. Here, I'm going to put it on right here. I just put it on. Here it is. Okay, so my stop is 10 ticks away. We'll see what happens with that, but my stop is 10 ticks away. It's always 10 ticks away on the 7 range. Okay, and that's something else that you should probably understand. It's going to stop me out, and it did stop me out. As far as the stops go and all that, it is based upon the size of the range bar. Okay, it's based on the size of the range bar. All right, so for instance, if you go here, wait, there's an NQ trade here too. If you go here to targetviewtrades.com and you go under more, you go to risk management. Hang on, I gotta throw my stop at break even on that NQ trade. Here, it's at break even right now. Okay. And you go to risk management. I'm sorry, go to more, and then go to risk management, more, and then risk management. Am I still in that? Nope, I'm on a break even on the NQ trade. It depends on the size of the bar. The risk management depends on the size of the bar. Now I'm using a 47 on the NQ, but I'm just going with a 50 range. So I have a 60 tick stop that trails to break even after 20 ticks, and a 75 tick target. So that one that I was just in there went to break even after 20 ticks in profit, and just took me out to break even. But the 7 range ES is right here. Okay, that trails to break even. It's a 10 tick stop that trails to break even after 4 ticks in profit with a 30 tick target. Right, all that stuff is the same all the time. This one right here is the trade that I just took, and I ended up with a break even on right here. Okay, I just took that where it came out of the overbought, and that was a conservative break even trade. Okay. It didn't put in a lower swing. You see, it got into the oversold, and it didn't put in a lower swing. That shows a little bit of weakness right there. We are in the red background still, so that's good. If we pull back from here, we'll be looking at a different retracement right now. It's going to be from right here to right here now. Okay, that's what we're looking at. All right. On the ES, we're in the oversold, and we're in the red background again, but this has changed now too. All right, so if I just get rid of that one and I draw a fresh one on it, this is what we're looking at from here down to here. So this right here on an up close would be a pretty good aggressive spot to trade. Okay, on the ES, on an up close. Now it's above there, so you might want to wait for conservative trade. Now that I think about it, wait for conservative trade because it's above there. I like to be on it or below it for the aggressive, but the down close right there, that's your conservative trade. And here it is. I'm going to throw my stop at break even on that one, and that should go all the way down here to the prior swing low. All right, it should go all the way down here to 866.5. Now I'm going to lock in 4 ticks on that, and I'm out with 4. Okay. And that is a simple trade right there. Now this one right here is pulled back. It's almost got 100% retracement. I'm going to wait on this. You don't want to do this right here. See how it went down right here? I didn't see it right here while I was doing the ES trade. I didn't see this, but where it went down right here and it didn't go all the way down into the oversold and it pulled back up, you don't want to take this trade right now where it comes out of the overbought. Okay, can I place an arrow where I took the losing yesterday, I didn't place one there? I thought I did. Or did I do that? It was... I meant to place it there. I accounted for it. Let me go and find that trade. Yes, you have a red arrow on that, where I did that one. Was it here that I did that? Oh, it was right here. I was aggressive, wasn't I? I think it was right there. I'm not sure. I'll go look and see exactly where it was. But that was a stop out right there. Yes. Let me go and see exactly where that was, that ES trade. Okay. I will be able to tell you in a moment. Let me undo that and undo that and look at this. ESEP. 100.01. Yeah, it was right in here. No, somewhere in here. 1900, it was right in here somewhere. And no, I'm sorry, that's the wrong one. I'm looking at the wrong one. It was the one before that. It was at 58. 58.12. I'm not the time. 14:58. It was in here somewhere. 14:58.12 or something like that. That's where I did it. I think it was right in here. Right there. Something like that, but I ended up stopping out on it. And show why I took it. Well, I gotta figure out where exactly it was I took it first. It says on the ES I filled at 71. Is that right? 71. Oh, I think I did. No, because I would have made profit right there if I'd have done that. I don't know where I did it exactly. I see the actual exchange, the actual time. I got it somehow. I got it all screwed up over here on this thing. See, they're in the wrong time zone. I don't know what time zone that is. I think it's GMT. But anyway, I did stop out on it. Was it a long trade or a short trade that I stopped out on? I thought it was a short trade that I stopped out on. I don't remember. But either way, I did stop out, and it's in there somewhere. We'll get back to that. Okay, or maybe not. Over here on the gold just had a big move up. Now this right here, remember I showed you there were these different types of chop. This is the bugle chop where we have a lower low and a higher high in the same bar. So what that means is you're going to be looking for it to pull back to the midpoint of this one leg right here. Okay, where normally if you had, when the markets, oops, hang on. When the markets are going up and down like this, okay, normally you're going to be looking, if you enter here, you're going to be looking for it to get up to here. All right, but if you have a leg that goes all the way down, from here all the way down to here, like that, to this right here, or it exceeds it, like that, which is what we actually have. It's going in the opposite direction. But the midpoint is what you're looking for then. You're not looking for it to get back up to the swing high, you're just looking for it to get back to the midpoint. So that's what this is doing right here. Okay, it's actually going even higher right now. So we're going to be looking for that to get back to the midpoint of that one leg. All right, I'm not going to draw any retracements. It doesn't matter what direction you start from, is basically what I'm saying. It's from here to here, the midpoint. And that's what you're going to be looking for. It's a big move on gold. It probably won't make it all the way there on the first trade. I'm on the first run. That's a huge move on gold. I don't know what just happened, but something did. And I was looking for, we just turned to red here and red here. So let's get rid of these. Okay, we get rid of that. We get rid of this over here too. Get rid of both of those. So now, this is what we're looking at right here. Okay, and on this this one is from right here, where it came out of the overbought. That's where you want to start. So that's what we're looking at on those two markets right now. We're in the overbought right here, but that's not going to do us too close to the swing low. Again, this is nuance. You could have taken the down close right there and taken the trade, and it might work out. It's down at the swing low right now. I would be locking in profit right now. I would move my stop to break even if I'd have done that on the ES, but it's not the kind of trade that I want to take. Right, the kind of trade that I really want to take is when it pulls back up a little bit deeper into this area right in here. Now, we did go from overbought all the way down to oversold. So that changes things a little bit. Because now you have a couple of different areas to work with here. From here to here, or from here to the next swing high. Okay. We'll just go down to here like that for right now. So over here, this ended up going up a little higher, so the midpoint on that is going to be more like right here. Okay. I don't think you're going to get that pullback all at once on that. Alright. Okay, so this is what the live trading is like. Okay, when I'm doing the live trading, this is what it's like. I do this in the morning every single day for 2 hours every day. But this is a new thing on Wednesdays. I'm going to do it with you guys on Wednesdays, so you guys can get in here. I mean, so far today, if you'd have taken either of the NQ trades, I think you'd have made enough to pay for the subscription. If you'd have taken one of the S trades, you would have made a couple of weeks of the subscription. But if you got the stop out, then that would have stunk. That was the stop out is $125 per contract. But overall, we're up on the day, right? We're at, in this session, we're at minus 75 total on the ES and plus 280 on the NQ. So overall, we're up $210 a contract right now in this session. And it's what, 5 trades? Yeah, 5 trades, I think. So what we're looking for here right now on the ES and on the NQ is a pullback, right? We're in the red background, so we're looking for a shorting opportunity when it pulls back. It's just going to pull back. Now, there was something that I was looking at earlier. Let me hit save on this and go out one more and see if I actually have it on. See, I do have it on the daily chart here. This right here is what we needed. We needed to have a big down day like this. We actually need another one tomorrow. We need to come down and hit this. All right. After this crosses above that, almost every time it comes back and tests this. Now, I had written all this stuff down 2 weeks ago. You know, before any of this was here. Let me just grab this. 2 weeks ago, it looked like this, right? And I had written all this stuff in here, extended out to where it is right now, and drawn all that stuff, saying that this is where it should go, and this is what it should do, and this is, you know, how long it should take to get all that. And that's all based on the stuff that, you know, that I do all the time, and that I've been telling you guys about. This was a head and shoulder pattern that I saw forming right here. You know, when we only had this part of it right here, I drew the whole thing out for you. And then I drew this stuff in 2 weeks ago. I drew this stuff in saying at the end of this triangle, at the end of this rectangle here, we should get a big move up. And that happened a little sooner than I thought it was going to. But this pullback right here is something that I've been looking for a couple days. And I'm hoping that we're going to get this today. And it might even be bigger by the end of the day. It's 310 right now, so it might even be bigger and get closer to the green line here, the BBC. I'm hoping we actually get tomorrow maybe a wick down to hit it and then a bounce. Because what it should do, I had projected, it should get up to about right here. Right here in this time frame, it should get up to about right there, I think is what I had projected. So I think by the 27th, it was the 27th, I think, is that I had projected that to be up about right here on the 27th. So the markets are doing what I'd hoped they would do, what I thought they were going to do so far in the bigger picture stuff. But, you know, for the world that we live in, the world that I live in, the world that I trade in, you know, this stuff right here is just great. There's just so much opportunity to get in there and make money when you have good volatility like this. All right, let me slow down. Does anybody have any questions? I said like a whole bunch of words, and I don't see any questions coming in. Some of you guys, I know some of you guys have tried to take the trial and you couldn't figure out what your ID was and that kind of thing. Your ID for most people, I'm premium, so mine's over here on the left. But most people, you're gonna have it right here. It's gonna be some kind of thing. If you put your own logo on there, like I have, it'll be your logo and it says logged in as TV trades. But yours might be right here in the middle with just your initial or something like that. Whatever your ID is, it have the initial of your ID. You got to click on that. That's where you give me your ID. Okay, that's where the ID comes from. You got to give me that ID. All right. Again, if you haven't taken the trial, it's only $25 to get started. That's nothing. Those of you guys that live near us, I got a pizza last night from Village Inn. One pizza was $24.97 or something like that. One pizza from Village Inn. I know there's a bunch of you guys that live near me, and I know Jessica. She really loves her Village Inn pizza. She said so. I had one last night. All right. So we're getting a pullback here. We're in the overbought here. We're in the overbought here. You see how identical they are right there? I want them to show us a flat spot in here at the top because it's got a. It just switched. It just switched to blue on us. The background just switched to blue. I think the NQ is probably gonna do the same thing. It hasn't yet, but so right now, that changes things. Okay, since we're not looking for shorts anymore, now we're looking for longs. So let's remove that, and now because we're looking for longs, we're gonna draw from right here up. Okay, be right here up like this. So we'll be looking for longs to pull back down into this area right here. Now this hasn't flipped yet, the NQ hasn't flipped yet, but we're still looking for it there. Over here on the Russell, if you've got an up close on this bar, this would be a good spot for a short right here on the Russell if you've got an up close on that bar. Right over here on the gold, if you use this leg length, then this would be an okay spot. It would have been an okay spot for an aggressive trade on the gold if you're using just this little leg length, but that's not the right leg length to use. I should probably explain that too. All right, when I'm drawing these leg lengths, when I'm drawing these retracement lines, this is how I do it. Okay, when you're in the blue background, you go from the bottom up. Okay, we're in the blue background. So you go from where it went out of the oversold to where it went back into the oversold. The high and low in that area is what you draw it from. Okay, so it's from right here to the high is all the way up here. That's how you would draw it. The high and low within that area. So let me say that again. When you're in the blue background, you're drawing from the bottom up, and it's when it comes out of the bottom to when it goes back in the bottom. The high and the low in between that area. Okay, when you're in the blue background. So that's how you would draw it there on the gold. When you're in the red background, like this right here, then you're drawing it from the top down. You're drawing it from the top down. I think that's what I did right here. You're drawing it from the top down, and and you have to go from where it came out of the overbought to where it went back in the overbought. So like right here to where it went back into the overbought, right there, the high and low in that area. That's what this was right here. Okay. That's how you draw the retracement lines. And, these kind of things that I'm showing you right here, they're not things that are, I know a lot of you guys just want automated things and arrows, and that's fine. I've got that. I've got that. Let me just save this, and I'll go look at that right now. Go out here and look at this one right here that I had created for you. Now, this one is going to be called Counter Strike when I finish it. But this is what it looks like on 100 range NQ. So it really didn't give us any trades right here. It really didn't trigger anything right here. But see, it should have triggered a trade. It should have triggered a trade. A couple of trades in here, but it's not done yet. But if you go to the ES, for instance, like I don't know what the ES looks like right now, but we're gonna do the ES on a smaller time frame. Go down to like a 19 range on the ES, and see the ES triggered a trade right here. Now it's 19 range bar, so you're going to sell the open of that bar, and it goes 19 ticks into profit. That's easily the goal for the day. You won't have all this stuff down here. This is what's doing the calculations, and basically what it's looking for. It's looking when these lines are in between. There's other lines. There's other horizontal lines in here that you don't see. Something like that, and like that, and when these lines in here are inside of those lines and this line gets to the outside, that's when it triggers a trade. Okay, but it's doing a whole bunch of calculations to put all those lines in the positions that they're in. And the way it's going to manifest itself to you guys is just going to be an arrow that says take a short. You're going to get the arrow when the bar closes. Like this is a down arrow, but the bar closed up, so it's telling you to short the open of the next bar. Johnny, you say the first half hour is for trading, and then you start teaching, not trading. Can I just trade the first half hour and then explain for the next hour? Thank you. That's kind of what I'm doing, isn't it? I traded for the first half hour, first 45 minutes or so. And now I'm doing explaining. I think that's kind of what I'm doing, right, Johnny? When I say 30 minutes, I'm estimating 30 minutes, right? But I want to take the time to show you guys other things. That's not what I'm doing. Okay, I'm explaining while I trade too. You're saying you just want me to trade, just straight trade for 30 minutes and then go back and look at it without explaining anything that I'm doing. That's what you mean? Okay, I see what you mean. Okay, because I'm doing a lot more explaining while I'm trading. I'm doing them both at the same time, right? That's what you're getting at. Well, this is a relatively new format for me, so it's, and I want you guys, I don't know how long everybody's going to be able to sit in here. So if people want to come in here and see the new stuff, and all I'm going to do is trade for a half an hour, and all they have is a half an hour, then they don't get a chance to see that. You see, so I want to hit everyone's needs. But let's look at a couple other things. Okay, now that I've traded, all right, let's just say I'm going to stop trading for right now. Okay, we have 40 minutes left to talk about things. Okay, in here, right here, you would have drawn, when you have a red background, you draw from the top to the bottom, and down here at the bottom, when you do your retracement, it's where it comes out of the oversold and goes back into the when it comes out of the overbought and goes back into the overbought. So the way you would draw it would be like this, right? And this right here is a great spot to take a trade. I didn't, I missed it, but that would be a great spot to take a trade. Right here, do the same thing, right? Right now, what you have to work with is just from here to here, right, so far. When it gets up into here, when it gets back into the overbought, that will show the bottom, right there, okay? And over here, you'd have to start back here where it came out of the overbought and draw down. When you have a red background, you're drawing down. When you have a blue background, you're drawing up. Okay, red down, blue up. Okay. So let's get rid of the extra stuff on here right now. Move that one. All right, so we've gotten into the overbought right here, but we're not at the midpoint. So if this bar does close up, you see these are range bars. So if it does close up, it's going to give you a flat spot here at the top. Now, that's not going to be a place where you want to trade, right? If it gives you the flat spot, then you're going to want to take like that. You're going to want to wait until you get a down close and it pulls it out of the overbought. Be a conservative trade, pulling it out of the overbought. So like right now on the NQ, what I would do is sell it right here. Now that it's giving us a down close, just sell it right there. Okay, where it's giving us a down close right here. And this isn't really a great scenario because the swing low is right here. But I'm going to bump that to break even after it gets 50, and I think it just did. It's got to go 20 ticks in a profit, and it just did. It also hit the swing low. I'm going to lock in a point on that. Actually, I'm going to lock in 3 points, 2 points. I don't even know where I'm in at. Where am I in at? 1250. Okay. Well, it looks like I might just get all of it. 1250 down to... Oh, I did get all 75 ticks. Alright, just give me all 75 ticks on that trade. I have a 75 tick profit target on this. Okay, so I got 75 on that one. That puts us at 131 ticks. But you see, that was a pretty easy trade to take, right? You see everything coming together, all the little pieces coming together, and the pullback was right here at the midpoint. You want to have a trade off the midpoint. I told you it was going to have a flat spot. When it has a flat spot, you want to take the conservative trade. The reason it got the flat spot, and this is important, you understand the reason it got the flat spot. When it was pulling back up to that area that you wanted to trade at, that I wanted to trade at, when it was pulling back up to that area that I wanted to trade at, it wasn't there when it went into the overbought, right? Went into the overbought right there. Now I could have sold the open of the next bar. Being aggressive, I could have sold the open of the next bar, but it wasn't a good place to be aggressive yet. Okay. If I would have sold the open of the next bar, I would have gotten some profit in here. I would have gotten out with a little bit of profit right there. Then I would have missed that big trade. But I really wanted to trade it from this area. And the reason you want to do it from that area is because it's an area that price normally reacts off of. Okay, like right here, we have the same thing going on right now as this area right here. Right there, that'd be a good spot to short it right there. Now this one you could be more aggressive, okay? Now let me show you let me show you what I mean. Let me move this out of the way and I'll just draw another one. Okay. So you're drawing down like that. So the entry was right there. Now I am already short on this. I gotta bring my DOM over and show you. I am already short on this. Okay. There it is right there. I should have had my stop at break even. Crap. I should have had my stop at break even on that. I'm gonna throw it to break even right away because I should have had it at break even. It went all the way down here. And I should have had it at break even already, but I ended up with a break even on that. Write that down. Okay, and that ended up being a break even trade. If I had it over there and I wasn't talking, I would have taken some profit on that. But that was a break even trade. Now the reason I did that aggressively because the entry was right here at the midpoint. When it got into the overbought, this candle right here closed right at the midpoint. So I shorted right there aggressively, and it ran. Let's see exactly how much it ran. This one ran 39 ticks into profit, right? I normally bump my stop to break even after 20, and then after it goes to like 30 or 40, I run it up 10 ticks, or well, with the NQ I run it up like 4 ticks at a time, so I run it to 8, and then 12, and then 16, so I would have gotten out with more if I'd have been paying attention. But it went down to just about the swing low, didn't put a new swing low in. It did hit this, though. It did get into the oversold without putting a new swing low in. So now, when it pulls back up, you're dealing with a different level right there. You see, it's all crunched up now because it stopped right here. So this isn't really going to be a great place to trade right now. It's getting into chop. Now that is one of the things that I wanted to talk about earlier. I got sidetracked. I want to talk about the chop earlier. The different kinds of chop. Like right now, I told you the two different ways to trade. There's the aggressive way and the conservative way to trade, right? And the aggressive way is when it goes into the overbought. When you have a red background, you sell it at the open. If you're at a good spot, you sell it at the open of the next bar. Conservative way, if you're not at a good spot, and the down close is going to put you at a better spot, then you sell it then on the down close, the conservative way, right? There's a couple things you got to keep in mind when you're doing this. I got to get back to the other type of chop trading, but I'll get to that in a minute. One is where your stop is going to be, all right? This is why this is not a good place to trade right here, because where your stop is going to be a mess. This kind of chop that we have right here, if it goes down below here right now, that would be good. But if it doesn't, like let's say we sold right here, our stop is going to be right here at 100% retracement. You don't want to have your stop at a swing high or at a swing low. You don't want to have your stop at a pivot point. You don't want to have your stop at a 50% retracement or 100% retracement, because there's a reason those things are there, right? They're there because if you look at the ES, it just had all those big numbers right here a second ago. It just ate them all up. It doesn't have any right now, but you see this one way down here at 58.40. Now that's probably not going to come into play right now, but it will come into play probably while we're in this meeting. It was probably going to get all the way down here to 58.40. The market is attracted to those numbers, like right there. The market is attracted to those numbers. Okay, right here, 58.45. Those are usually going to be swing high and swing low numbers. You don't want your stop to be part of that, right? You can use those for targets. Once you get into a trade, you can use them for targets, but you don't want your stop to be in that mix right there, because the market is attracted to those numbers, and it's going to go fill those numbers up and go through them. That's just the way that the markets work. They've always worked that way. All right, so this is now down to here, right? It's stretched out a little bit, and that's a better looking opportunity right there. So now if we get all the way back up into the overbought, and it happens to hit right here, and that could happen. It could work out, so we're going to have a nice trade here. Depends what it does right here. If it goes down quite a bit and then it gets up into the overbought, we could have a nice trade there. Otherwise, we're going to have to wait for the conservative trade. Okay, the same thing's happening over here on this one. Right, but this one's not going to be a trade because it didn't make it into the oversold on that leg. The NQ's got more of an opportunity for a trade right here, I think, than the ES. See, there it is right there, but it's up above, so you want to take the conservative trade when it comes back down out of this. So that's going to be 12 ticks from the top. All right, that'd be 91.75. Now it might not be a trade at all. If this closes up, it's not going to be anything at all. I'm not going to be interested in this if it closes up, and it did. All right, so I'm not terribly interested in this anymore. Why? Because if we took this trade right here, our stop would be right here at 100% retracement. And the market's going to be attracted to that. I just said that. You don't want to have your stop right there where the swing high is, 100% retracement. You don't want to have your stop where that is. You know, if I took it on a drawback, like on a pullback right up in here, if I took it here so my stop was up here, that'd be a little more attractive to me. But I didn't do anything with it. It's just not that good looking, not that good of a looking trade. What am I trying to say? Not that good. The trade just doesn't look that good to me. There, okay. It's not that appealing. It's not an appealing trade. This just went into blue over here, and then went right back to red. That's kind of makes you not want to trade. Right. So let's get rid of all these things that I have hanging around here. Now, you don't have to actually draw those things. I do it because it gives you guys a precise, an exact number to look for. Right? A lot of times I'll just eyeball it, and I'll just place my trades based on the lines that I draw. Because those are pretty good too. Like over here on the gold right now, we're going to go from right here to right here. So we're at a 50% retracement right here. If we get it, let me draw it. Let me draw it for you guys. Let's see, is that exactly at 50% right there? Yeah, so you could go long right there on the gold. Aggressively long right there on the gold. Okay, from right here. 25.3. Okay. You could wait for the conservative, but the conservative is going to put you pretty close to the swing high right there. Okay, conservative will put you pretty close to the swing high. It should make it up to the swing high. With the gold on a 9 range, it's only going to go 5 ticks into profit to get the stop to break even. Okay, 5 ticks into profit to get the stop to break even, and it's only got a little bit more beyond that from the entry point. You know, the entry point was here at 6.2, and it's only got up to 7.2. It's only got 10 ticks in it. So it's not the best looking trade from the conservative perspective, but the aggressive right here, where it went into the oversold right there at the 50% marker. That was the place to get that. Do you guys see that? That's the trade I'll take every time. That was Ricky S. last meeting asked me, what trade I would take every time. That's a trade I'll take every time. I didn't see it, so I wasn't able to get it. But that's a trade I'll take every time, Ricky. And I had several of them today. Several of them. And all but one of them worked out, I think. Okay, so like right here on the Russell right now, this is what you're looking at from there down to here. So an up close on this bar is going to put us in the overbought right at the midpoint. If we get a down close on it, it's not going to be a trade because we didn't get into the overbought. But if we get an up close on it, it's going to put us in the overbought right at the midpoint. So that would be a pretty good place to take an aggressive short. Right? I would do that there. Right here on the ES. This is a conservative area right here, okay? Because we've gone flat down here. You'd be drawing like this. Okay, like that. And oops, I'm sorry, I did that wrong. Sorry, it was a good trade right there on that one that I didn't get, and I didn't get the. I should have gotten it. Sorry, I drew it backwards. It should have been drawn like that. So right there was a good spot. Right there on the up close, right there was a good spot. And we didn't end up having the trade here. We're in the overbought. That would actually, that did end up being a trade right there. You could have done that. The aggressive short right there. That wouldn't be working out right now. But to go into the overbought and it closed right there at the 50% marker. But I didn't see that one either. I can jump on it right now. It hasn't gone into profit at all, but I do think it's going to go up. Over here right now on this one, you'd be drawing from the bottom up. Okay. Now, if you're in here and you're new to trading, I don't recommend you trade 4 markets at once. Just pick one, maybe 2. And you can do this stuff on the micros if you want to. It's all the same stuff on the micros. If I change this to a MES, doing the same thing just with micros right here. It'll close right there. Would be a great spot to buy. Okay, on a micro. Now, I don't have any micros going right here, but if I had micros going right there, would have been a great spot to buy. Right? Why? Because it's right there at that 50% retracement. You got the up close out of the oversold right there. Great spot to buy. You see that? So it's 3:33. I have 27 minutes left. I want to take some time to answer any questions that you guys have. You guys aren't really asking a lot of questions. Right? So we got Netflix, and that's Netflix buy. See, now that right there, if I had it set up on my phone, it would have sent me a message on my phone too. It could have sent me a message twice on my phone. It could have sent it once from the app and once from Telegram, because I have both of those on my phone. So the idea is that you don't have to be sitting there waiting for the markets or watching the markets every single minute of every single day. Okay. Okay, so this is... I should have taken that trade there on the S. I wish I would have gotten that. I should have probably taken this one here on the Russell too, but I didn't. So I missed one that would have stopped out and one that would have given us a nice win. Alright, so far in the day we've taken 8 trades. We're up 131 ticks on the NQ and minus 6 on the ES. You missed last week. When did I start putting the retracement on the chart? I think the week before that, Mark. Might have been the week before. Let me just show you how that's drawn too if you missed it before. This, you just take this right here, and I'm not using it's called fib retracement, but I'm not using the word fib because I'm not looking at any fib numbers within it. Just put it on the chart, and yours will probably have a whole bunch of these checked off. You probably have that one checked off, and 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 that one checked off. That's probably what yours is going to look like by default, something like that. Right? Just open it up. I only have the 0, the 1, and the 0.5. Those are the only ones I have. 0, that's 100% retracement. From 0 to 1 is 100% retracement. 0.5 is a 50% retracement. Those are the only ones I work with. Okay. If you're working on a much larger time frame, then you can use those other ones. Like if you're working on a daily chart or something like that, for instance, and it's not jumping all over the place on you like this. Then you can start looking at those other ones and see if they correspond, or what is the word? Confluence. Confluence, that was the word from years ago. If there's confluence between that retracement level and any other thing, like one of these lines here, if there's confluence between those, that'll give it a second area or third area of support in the same spot. But for the world that I live in, the smaller time frames that I make money in, you don't need all those little ones, all those intermediate ranges. Okay. On how to set up alerts in TradingView? Yes, there is. The question was, is there a video about how to set up alerts? Yes, if you go here to targetviewtrades.com, under more, go to alerts right here. Okay, and this is a video on how to set up alerts. Now I'll show you right now, so you can see it right now, Larry. Okay. the indicators, different indicators have different amounts of different types of alerts and different things. Now let's just go with the TV trades, okay? Inside the TV trades, it's got a bunch of different indicators. There's a bunch of different things that I'm not showing on the chart. I'm only showing the red and blue background. That's all I'm using in the TV trades. But if you wanted to get other alerts like this, it's going to give you this yellow arrow. If I turn that on the trigger alert notice, what that gives you is the yellow arrow every time you have a red background and price goes into the overbought. You have a red background and price goes into the overbought. If you have a blue background and it goes into the oversold, it's going to give you one of those. It's kind of like a heads up that you probably have something setting up right now. Okay. Now, there is an alert based on just that. If you go here to alert and you choose in here TV trades, and in here, these are all the different alerts that I have custom made for that. That particular one is this right here, the trigger long and short potential. Those are the yellow arrows right there. All right, those are the yellow arrows. So if you want to have one on every down arrow, you do the trigger short potential. You choose once per bar close, like that, because these are range bars, so you only want to trigger on a bar close. Do once per bar close, like that. You can give yourself a message in here, like trigger short potential. You can do yellow arrow on, what is this, NQ 47 range. You can give yourself a message like that, okay, and come over here and you can do the different kinds of notifications. Like that one is coming from Telegram. This one is a toast notification. You can have it send yourself an email, play a sound in your headset if you want, notifying the app on your phone. Just hit create, and what it's going to do is create one right over here. Yellow arrow and NQ 47 range. Okay, that's how you set them up. It's pretty straightforward and easy. And once you get it set up, you don't have to have your charts on or anything like that. It's going to send you that alert whenever it triggers. Those alerts are server side. So whenever it triggers, it's going to send it. And if you shut your charts off and you turn it back on, you had 100 alerts that triggered while it was off. It's going to pop up like 100 little windows over here. It's really fast. It'll just pop them all up. It'll beep, 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 and go right through them all. But it's going to show you everything that happened while your charts were off. That's all you have to do. And the way that I do it, I set them up in here and it sends it to my phone, it sends it to my Telegram, and it sends it to your Telegram as well. Well, not your Telegram, your personal Telegram, but the Telegram channels that we talked about earlier. This one, and this one, and this one, and this one, and this one. Actually, it doesn't say anything to this one. I think this was the micro futures. And so while I've been talking, I think we've had a bunch of micro futures trigger, right? In here, it's got the time, so 1800 right there, 1800. We had this one, this one, this one, and this one all triggered while I've been talking since I started this meeting. Okay, so I can get rid of this one right now. You can pause it if you want to just pause it so it won't trigger anymore. You can go in to change the properties. Like, this is on the NQM right now. Well, it was on the NQM. It's only showing live alerts right now, but it was on the NQM. But you could also go in here and change the symbol in here. Change it to different symbols and things. You can do things on the fly in here. But I have this set to only show me active ones, so I just got rid of that one that I was playing with there, I think. Anyway, that is how you set up alerts. Okay, you can also watch that here. If you go to targetviewtrades.com, if you guys don't know about the Target View Trades, if you're subscribed and you don't know about Target View Trades, go out here. I have videos on all this stuff out here. How to set things up, the trigger, the sniper. This webinar, last week's webinar is right here, and this webinar will be right here, in about an hour and a half. It'll be right here. Once I get it into YouTube, I'll be able to post it right here. So you'll be able to watch it here. You'll be able to sign up for next week's. It's going to say 528. Be able to sign up for next week's right here. You'll also be able to sign up for next week's right here on the home page. So I know some of you guys, I'll give it to you in just a sec, John. I know some of you guys, for some reason you don't get my emails because my emails go into your spam, And until you fix that, you're not going to get the ones, the ones that come out about the new meetings and all that. You can go to targetviewtrades.com. The new meeting is always going to be here on targetviewtrades.com. Like next week's, I already have next week's ready to go. I already have this page ready to go. All I have to do is save it with next week's information on it. So next week, after this meeting is done, once I save the fixed page, it's going to have 528 on it with the link to next week's meeting right here. You'll be able to sign up for that then. Also, when the meeting ends in GoToWebinar, I have a thing that automatically sends you an email that's going to have the information for next week's meeting right in that email too, so you can sign up for that there as well. John, the Telegram channel that I was talking about, you see how that let you know when it got into the oversold right there? It's like, hey, pay attention, focus. And if I had an alert based on that, it would have just triggered right there. Okay, why not just put an alert on? I'll just put an alert on for that. And so we'll be able to see one of these alerts triggered. Right, let me create one just for that. Here, let's do the TV trades, and we'll do a long potential, and we'll do once per bar close, and we'll do notification, and we'll show the toast, and we'll play a sound. Okay, and I'll hit create on that one. And that was the top one. Let's do another one for the other one. We'll do TV trades and short potential once per bar close, and same stuff saved. So it'll let me know when it happens again, and I'll point it out to you. You'll see it pop up here too, or you'll see it pop up over here anyway. It's not going to go into Telegram, so you won't see it on this side, but you'll see it on this side where it pops up, and when it does happen again. All right. Just to clarify, the background is blue. If the background is blue, think of it this way. Okay. You have this line, right? And if the background is blue, you're going to be drawing from the line up. All right. If the background is red, you're going to be drawing from the line down. So, Daryl, in the morning when I'm doing the stuff in the morning, we have the context on there, and we have like the YBR that goes like this. So when you're above the YBR, this is what you asked this morning. When you're above the YBR, you're just taking long trades. When you're below the YBR, you're just taking short trades. In here, the TV trades is more sensitive than the YBR, so you're going to get more accurate signals from it, and it's going to change quicker. Like, you don't have 1 bar YBR changes. But think of it that way. When it's blue, you're above it. When it's red, you're below it. So when it's blue, you're drawing from the bottom up, and when it's red, you're drawing from the top down. Okay. That's how you're drawing all the time. And John, I was trying to get that for you. I posted it a few minutes ago, I think, but I'll go get it again for all of you guys. All right, the micro futures. Here it is. Go to now. I haven't given this out to anybody yet because I just created it Sunday night or Monday morning or something like that. I think there's just a couple of people that are in it right now, but I'll give it to you guys. You can all. Well, actually, I won't give it to everybody in here. I'll give it to you, John, in here. Hang on, let me just copy that link, and I'll hit done on this. You have to be a subscriber. John. John is an annual subscriber, so I will definitely give it to you. But you have to be a subscriber to be able to get in there, right? But that is for the micros, and I'm actually going to redo the signals that are going to there. This is just the ones that are coming from the TV trades, all right? So the signals that are going into there are coming from these right here. If I turn this on, that and that. If I turn that on, it's coming just from there. Like, you got one here that said to go long. Back here, you got one here that said to go short. You got one here that said to go short. You got one here that said to go long. Right? That's where you're getting those signals from. Yes, you are, Sharon. You are. I haven't sent it out to everyone yet, but I will send it out to everybody who is a subscriber, Sharon. Okay. You see, it just did it right there. There's one right there. It just did the yellow arrow, the trigger long potential. It just made a ding on my headset. You guys might have heard the ding. But that's when it goes into the oversold with the blue background, right? So it's getting your attention and saying, okay, focus on this. Now you could actually take a trade from every one of those if you wanted to. You could buy the open of the next bar. Okay, whenever you get one of those, it's something you could do. It is something that's pretty good. Sharon, let me just paste that in there for you. Okay. What time is it? 3:47. I have 13 minutes left. Maybe I'll go an extra 2 minutes. But you see right here, it just turned to red. So on my phone right now, you can't see it, but I just got one on my phone that I'll show you what it looks like on my phone. Let me do a screenshot of this. And crunch it up like that. Do that. I'll send it here. It's a Telegram. Use my thumb. And send it to this one. And send. There. I'll show you what it looks like on my phone. Whoa, that last one that just popped. This one right here. Hang on, that's in this Telegram channel. This is what it looks like on my phone. Right? This is one that just triggered right now on my phone. Right? It's a put, tells you where it is. This is another yellow arrow right here. It's a put, tells you where it is, what time it was, current price, target, all that stuff. Okay? That's what it just sent to my phone. So we just got the yellow arrow right here. We got the blue arrow right, and we got this yellow arrow here that said to go long. We got this one that's saying to go short. So they're kind of mixed up right now. There is a thing that I have. I didn't set it for this, and I clearly did not set it for this. But there's a thing called the bias. You can set the bias right here, right? And if you set the bias, then it's only going to give you short trades when it's below the 233 moving average, and it's going to give you long trades when it's above. You see how I got rid of all the long trades in here? Because all along here, it's been below the 233 simple moving average. Okay, if I do this moving average simple, and I put this on, and that was just something else on my phone. 233. Okay. So it's below the simple moving average. Whenever you get a trigger below the simple moving average, a short below the simple moving average, it'll let you know. If you get a long below it, when you have that turned on, it's not going to let you know. All right, oops, I didn't mean to do that. It gives you a bias on the market if you want to turn the bias on. And you can change that around. You see, like right here, they closed above it, so you got the longs right there. But all the other ones that closed below, all these shorts right here, you got all those shorts. Okay, and the yellow arrows are killing it too. You see, this stuff it's not that hard to do, right? It's not that hard to do. And all these signals are they're all over the place. You can have all kinds of things generated. It depends what you want to do. When it says put on MMQ, that means an actual futures up. Yeah, when I originally created it, John, I was doing it for options, so you'll be able to see the puts and the calls, and it actually did some calculations out if it went to the target, how much the based on the current delta, how much it would be, if it would be worth taking the trade or not, and all that. There's a whole bunch of things. I had that all going out to the web page. I don't have the web page anymore. I got rid of the web page at the beginning of May because it just got to be too much of a hassle. Everything that was in the web page, I'm also doing in Telegram, and it's real time in Telegram. On the web page, you got to hit refresh every time, and so yes, yeah. So the information that I'm giving you here, everything that I'm giving you here, is stuff that you can use on larger time frames. You know, that stuff that I showed you a few minutes ago. Crap, it's 3:51. The stuff I showed you a few minutes ago out here, the new stuff that I'm building. These are 100 range bars. Well, when it was on the NQ, it was 100 range bar. But so you don't get any signals here on the ES with the 100 range bar. But if you go to the NQ, you know, these are 100 range bars, and it works on equities too. It works on stocks, all that. It's like right here, 100 range bar. You know, that's 100 ticks. That's 200 ticks. This one right here it would have stopped you out because your stop would be like right here. So that would have stopped you out. You would have had some profit in it. Actually, no, the entry would have been right here, so you wouldn't have had any profit. That would have stopped you out for sure. But you know, something like this, if you trade in options, you know, we could do it on like the SPY. Let's just do that. Okay. You can trade options on the SPY, and you get one of these, and bang, bang, up, down, down. This one wouldn't have worked out. This would have worked out if it were an option. That would have worked out okay. This one would have been so good, but it works on everything, right? And all the stuff that we normally do also works on everything. You can just go to a larger time frame. This stuff in here. This stuff that we're doing in here. You can do this. You can do this on a daily chart if you want to, if you really wanted to. But you could go to like a 30-minute chart, and on a 30-minute chart, it's going to give you the same information like here, right? It said to go long. Back here at the open of that bar, it said to go long. That's a big move up. I meant to do SPY, but I don't know what happened. I meant to do it on the SPY. Alright, but the same information, okay? Right here it said to go long, and it was a great move. And I only have so much information on that, apparently. But, so all this stuff, if you want to, the B range trigger thing that you saw, that's development stuff. When I do send it out to you, it's going to be called Counter-Strike, and I'm probably going to build it into the actual range trigger, the existing range trigger when I do send it out. But those of you guys that are annual, you might get access to like a separate module that's temporary. Because it's, I can send it out to you guys and you guys can give me feedback on it more quickly. And it's just, I don't, when I make something new, I don't want to have to do it on for a whole bunch of people. I don't want to have to go and enable everything for everyone individually on a whole bunch of things. So I want to limit the number of things that I have in here. Like, you guys don't have access to that. You don't have access to that. Not too many people have access to that. It's mainly just this one, the TV trades, range trigger, the TV trades, and the sniper and the trigger. Those are the ones that you guys mainly have. And I'll put it inside one of those when it's ready. And the same thing with the swing trade thing. It's going to go inside something else. The NQ trade, that's going to go inside something else. Because it becomes a maintenance nightmare for me. If I start messing around and putting things all over the place and creating like 100 different modules. A whole bunch of years ago when I started doing this stuff, I thought having a whole bunch of modules was pretty cool. Turns out it's not. Alright. We're running out of time here, kinda. So I want to make sure I answered everybody's questions. Did I answer everybody's questions so far? How do I have different strategies in charting for the micros? No, it's using the same stuff, Hal. It's using the same exact stuff. Okay, it's all the same. I mean, I went to the micro on one of those, didn't I? Yeah, the yes, I went to the micro. It's the same exact stuff on the yes micro. You're looking for the same things, you're using the same retracements, you're looking for all the same exact stuff. Okay. What am I sending out for it? It's sending out these signals right here, but it's sending it to your Telegram channel. So you get notified right in your Telegram channel when that happens. I'm going to change that though, so it's not just those. It's going to be something else that's actually going to trigger it. Once I figure out exactly what I want to do, exactly how I want to send that to you. But for right now, you can just put your Telegram channel. You can just subscribe to the Telegram channel. This one right here. Hal, I'll send you the link because you're an annual guy too. And any subscriber, if you're in here and you're a subscriber, I can send you the link to this to get in here. All right, or if you're on the free trial. If you're not on the free trial and you want to get on the free trial and you want to get access to this and all the other ones, then you just have to do that. Get on the free trial, right? Go to tvtrades.com and sign up for the free trial. There's somewhere in here. Click on one of these orange things. It's going to bring you down to the bottom. And sign up for the trial. There, or there. Either one of those. This is 3 days if you do it from here. There'll be a link in the email that's sent out to you guys. That's going to be a 4-day trial. Okay? If you do it from here, it's a 3-day trial. But in the email that's sent out, the follow-up email that's going to be sent out with this, there's a 4-day trial. I haven't updated this in a while. I have a whole bunch more things to put in here. You know, people who have been funded at different places and all that. You know, there's a bunch more that I have to put in here, but it's time consuming. John, do I have a little bit of time? What time is it? A little bit, John. A little bit, because I have a whole bunch of things that I have to do as soon as this is done. I have like another hour of work that I have to do to get this ready. But I'll send you an email. Okay. Because I do want to get that done. All right. So let's see if we can get one more trade off here. Right now, we'll put this back. Just make it the ES again, because I don't have any microdons open. And it's getting kind of choppy here as we approach 4 o'clock. It's not really the best time to trade. It's getting kind of choppy, but here on this now, when you're in the red, you draw from the top down. I know the top is starting in the blue right here, but when you're in the red, you draw from the top down. All right. So right here where it came out of the overbought to wherever it goes back into the overbought, the high and low in that area is what you're going to use. Okay. And this is in the red, this is in the red, this is all choppy, so I wouldn't do anything with that. The one thing that I forgot to tell you about that I didn't go over was when you're in this kind of chop right here on the ES, when it's really choppy like that, you can get rid of the background color and just throw this guy on here. This one right here. And in this case, it doesn't matter what direction you trade, you're just looking for the blue to lead into the oversold. If it leads into the oversold by itself, you buy the open of the next bar. If it leads into the overbought by itself, you sell the open of the next bar. If it leads into the overbought, you sell the open of the next bar. If it leads into the overbought, you sell the open of the next bar. When it gets choppy like this, that's how you can trade, okay? When it leads into the oversold, you buy the open of the next bar. Alright, that was one of the chop things that I wanted to show you. This is the third kind of trade that you can do when you're in chop, but it's going to be really nasty chop like this to be able to do it. And this is a really, really effective way to do it, to trade in chop. It's a really effective way to trade in chop. Right, you're not worried about the trend. Now, when the leg lengths start to get bigger, then you're gonna be trading with the retracements with the trend. Okay, what was that indicator? This is down here in the TV trades range trigger, Sharon. It's this guy right here. Now, for you by default, it's gonna be red, and it's gonna be red, and it's gonna be in the area. It's gonna be in the area like that. That's what it's gonna be by default. You can leave it that way if you want. I just found it's easier to see if you change it to black and make it a line. It's easier to see. But, you know, when I made it in the area before, I made it in the area because you can easily see when the blue's by itself popping out of there. Right, the line is sometimes, you know, the line can be harder to see sometimes. It's really easy to see if you just leave it like this as an area. It's easy to see that way too. Right, when the blue's all by itself going into the overbought or going into the oversold, leading into the overbought or oversold. Okay, so that is, hang on, that is right down here. Let me close that. That's right down here in the TV trades range trigger. You click that, and it's going to be your div area. You got to have the password in on the other side for that to work. Okay. Okay, so it's 4 o'clock. What is the password? That is in the email that was sent to you, but I'll send it to you right now. Hang on. There. Okay. Let's see. Going down a list of questions. Okay, great, John. I think I answered all the questions. I think I got them all. Alright, so we got some trades off today. We had, this is actually, this would have been a pretty good spot to trade right there. It's too late right now. I could put an ES trade on right now, but it's kind of late. We had 7 trades, and we ended up with 131 ticks on the NQ and -6 on the ES. Out of those 7 trades, we had 1, 2, 5 of them that actually did something, and 2 of them that were break even. So out of the 5 trades, we had 1 stop out, 4 profitable, and 2 break even. Out of all the trades, that's what we ended up with. And a total of, well, if we look at it here, we had 131 on the NQ and -6 on the ES. So $580 a contract. Is that right? Yeah, $580 a contract, right? If I get rid of that, 131 on the NQ, $655, and -6. So $580 a contract. I have 10 contracts on, so we made $5,800 in this session. That's what I ended up with. That's gross. That's not counting any commissions. Right? If you count the commissions, let's do that math. All right? Just so everybody that says, oh, yeah, well, that's gross and that doesn't count the commissions. Here, let's do that math. It's 7 trades times 10 contracts times $2.50. Oops, 225. Sorry, 2.5 times 70. $175 in commissions. Not too bad. So the net would be that minus plus 5,800, net $5,625 in this session. Do these trades work better this time of the day? In the afternoon, Mark, I like to trade 3 to 4 in the afternoon is a better trading time usually. That's why I kind of did this from 2:30 to 4. And in the morning, you know, I go from 9:30 to 11:30 in the morning. I really like 9:27. 9:27 is what I really like. All right, because a lot of times, you know, in those first few minutes, I get the goal for the day. You know, any one of these is 3 minutes or less. You know, last month we had a bunch of them that were 3 minutes or less. The number of minutes it took me: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 in 3 minutes or less last month. Out of 19, I got the goal for the day. And, you know, all of them were 10 minutes or less. All 19 of them were 10 minutes or less last month. This month we got that one big one today because I had that 60 tick stop out mistake. But so we made $5,800 in this session. All right, pretty good stuff. Especially considering it only costs $25 to join. I can't believe I'm selling it so cheap. But, well, the idea is to make it easy for you guys. So, that is going to be it, guys. I am going to wrap this meeting up. Hopefully some of you guys took some of those trades and you were able to make some money and make enough to get started. It really doesn't take much to get started. It is a free trial. You know, the link that's going to be going out to you guys with the email that goes out when I'm done this, when I shut this down, is a 4-day link. You know, if you go out to the web page, it's a 3-day link. But if you use the one that's in the email, that's going to be sent out automatically. It's going to have a 4-day link in there for you. Okay. And that's it. All right. This is tvtrades.com. This is targetviewtrades.com. Target View Trades has a whole bunch of information. You'll be able to sign up for next week's meeting here. You'll also be able to sign up for next week's meeting from the email that's going to be sent out. So I just want to make you guys cognizant of that. All right, so I'm going to shut off the recordings right now, I think. Shut that one off and shut this one off.